All right, folks, happy Sunday. Hope you all have had a good weekend. I've been enjoying these NBA playoffs. Really, really good games. Before we jump into the weekly watch list video here, what I want y'all to do is go ahead and subscribe to the newsletter. I'll have the link in the description of this video. If you like these Sunday videos, subscribe to the free newsletter so you can get the premium version of the Sunday watch list, where this video is usually about 5 to 6 minutes long. Go into a little bit more detail in the newsletter video. Those are usually about 12, 15, 20 minutes long. So if you like what you get here in these videos, definitely go on ahead and check that out. But what I'm looking for here from the market over the next few weeks is a pretty good pullback. So what we've been looking for here, what we have been looking and waiting for, is this daily squeeze in the S&P 500 to finally wake up and release some energy. So you get the big buildup of energy over the last month here, and it's had a really good structure. The issue here is there's some pressure on the overall market with the breakdown for a few different sectors. So if you look at the industrials, you've had some recent leadership here, complete loss of momentum and structure last week. Daily squeeze fires short, you're at -3. So that puts a little bit of pressure on the overall market. The financials, again, recent leadership completely breaking down last week. They're at -3. They're under -3, and there's a daily squeeze firing short. That puts some pressure on the overall market. The transports, again, recent leadership, they're breaking down, so you're losing structure, you're firing a squeeze short. This all puts some pressure on the overall market. Here's the energy sector. That breaks down a bit last week. So as we're sitting here waiting for the squeeze to fire, it's a basic concept, but it's an important concept to understand. We're looking for strength collectively in the different sectors and pockets of the market that make up the S&P 500. So inside the squeeze here, you're banking on strength in industrials and transports and energy and financials, etc. You're looking for momentum and strength within the different sectors throughout the market to ultimately lead to that squeeze fire into the upside. But this is just the opposite. As those sectors lose structure and break down, it puts pressure on the old girl here. And now you're looking at a daily squeeze, I think, ready to fire short. So I got a call credit spread here for August 20th expiration. I got short strikes at 4,300. So basically placing a bet that over the next few weeks or so, the market doesn't bounce towards a brand new all-time high. I think quite the opposite is going to happen. So I don't plan on holding this trade until August 20th. I went a little bit further out to the expiration than I typically do. Major reason is you got a lot of premium here. So I'm able to go deep out the money, and I'm still getting close to a 1-to-1 risk-reward ratio. If you took this trade on one contract, I think you're risking about $1,100 to make about $1,800. Or I'm sorry, you're risking $1,100 to make $800. So pretty close to a 1-to-1 risk-reward ratio. I got that with 16 contracts. And what I'm looking for here, as different sectors are breaking down, that puts pressure on the SPY. We're looking like we're going to release all this energy to the downside. If you look at a weekly chart, I'm looking for a pullback here to the weekly 21 EMA, which we haven't really tested since October, November of last fall, so of last year. So it has been quite a while here since we came on back down to visit mama at the 21. So that's my target to the downside. That's about, call it 40, 50, 4,000. But a good perspective here is we could pull back all the way to, call it 4,000 or 40, 50. It's going to look like a pretty ugly drop here on a daily chart. It's going to look like a really ugly drop on a 30-minute chart. However, from that weekly chart's perspective, it's a healthy pullback, and the bullish trend is still very much intact if we do hold up there. If we start to break that level, then things get a little bit more interesting, but that's a healthy perspective. We could flush here a good 150 points. Your weekly trend is still very much intact. So that's what I'm looking for from the overall market. If you're going to be long something right now, I think it has to be the Qs just based on structure. However, the difficulty here is if the market does roll over towards 4,000, do the Qs come down with it? And that's what's going to be most interesting here. So what I would love to see for the Qs is that the pressure on the SPY does roll over here and cause a little bit of pressure on the technology stocks. And if we could also get a pullback to the weekly 21, which at least as of the last 4 or 5 times, 1, 2, 3, 4, it's been a great buy the dip opportunity. So I don't think you blindly load the boat as soon as we pull back there. But if we find some support, you got signs of bearish momentum coming to an end, it's a good healthy pullback. So again, just a little bit of perspective here to in regards to where we could pull back to, it'll look pretty ugly here, but from a weekly chart, it's a good healthy pullback. You still got your structure intact. So that's what I'm looking for here this week. I think the major thing to take into consideration, I run my business, my trading business off of a checklist. And this is what I'm going to teach in my upcoming class next month. If you're looking to go long, you don't rely on your opinion or your emotions. You work from a checklist and you follow that checklist. It's the same thing here if you're looking to go short. So with that being said, a big part of that checklist is picking your spots wisely. You don't want to go short at the -2 to -3 ATR extension. We could continue to flush, obviously, but in terms of probabilities, it's like getting long at the +3 ATR extension. There's a growing probability you're going to pull back or bounce back to the 21 EMA. So pick your spots wisely. I'm not looking to go short the industrials here. I'm not looking to short transports at -3. I'm not looking to short the financials at -3. So if anything, you're looking for a bounce here for the next good short entry. If we gap down tomorrow, the good entry, that ship has kind of sailed, right? If we do get a bit of a bounce early in the week, as long as we're under the 21, that's where you look to go short. You short near the 21, you take profits on the flush to -2, -3. So make sure y'all are picking your spots wisely. And of course, as always, these are all things we're going to focus on this week in the Simpler Options room. So for those of y'all in there, I will see you tomorrow morning at 10:30 a.m. Eastern. For the rest of y'all, I'll be live at 9 a.m. Eastern tomorrow for our pre-market prep. And like I mentioned at the start of the video, if you want the longer version of today's video with a little bit more detail, go on ahead and throw your name there in the bucket for the focus list. So enjoy your weekend, y'all. I'm going to go keep on working here, and I will see you all tomorrow morning. Rest up and be safe.